Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope everybody had a very beautiful day. And in today's markets, guys, well, everything really smashing through the all-time highs after a very nice inflation report that we got earlier this morning. So in today's video, guys, we're going to take a look at exactly what happened in the contents of that inflation report and why it was fairly bullish for the markets. Thereafter, I do have two earnings reports that I have prepared for you guys. Number one is going to be Alibaba, which reported earnings yesterday before the open. And number two is Home Depot. Going to take a look at Home Depot and how the consumer is shaping up in terms of their spending habits. As we know, those have been fairly weak over the past 3-4 months. So going to take a look whether or not Home Depot is reiterating that same trend or not. Thereafter, guys, we're going to take a look at our technical analysis rundown, of course, on our major stock market indexes and our big tech names. And lastly, we won't take a look into my portfolio. No trades made today, but I have a few little swing trade ideas for you guys now that we've broken the all-time highs in terms of looking at plays that may potentially have been left behind. So with all that being said, guys, let's get right into today's video. So SPY up 1.24%, very healthy day, and QQQ up a roaring 1.56%. All of the market participating in today's gains. On the heat map, you can see that expressed even better to where we have a very gorgeous day of broad market rally, guys, led to the upside by semiconductors having a beautiful day of recovery. Big tech names largely participating, everybody except for Amazon. Amazon's been leading the charge over the past few weeks, so if they take a little bit of a breather, not too big of a deal in my opinion. Healthcare, very nice recovery, which we were speaking about in yesterday's video. They were pretty much lagging behind the rally, now playing a heavy little bit of catch up today. Financials doing good, and even the bottom half of the market, guys, performing very, very beautifully. Only Tesla kind of left behind in the dust currently. Now, in terms of our one-day relative, you can see that even better. Everything pretty much pointing towards in the green and energy towards the downside. Now, that is a good thing, guys, that energy is down. It just reflects that we are having lower and lower oil prices since pretty much the month of April. These, however, will not turn up until pretty much the report that comes in, the inflation report that comes in next month. So energy services came in a bit high this month, which was to be expected, but the one that's coming in the month of June for May should show that energy prices have come down significantly month over month. And that's what we're really looking for to bring inflation even further down. Now, with all that being said, guys, let's jump into that inflation report right away. And we're going to kick it off with a few of the headlines. So let's take a look at what we were expecting for CPI. You can see right over here, we were expecting for year over year, 3.4%. It came in line, 3.4%. Where the change was month over month. Month over month, we were expecting 0.4%. We actually got a nice little 0.3%, so lower than the expectation. And core coming in at 3.6, which is the lowest read in 2 full years, guys. Very, very happy with this read here on core. And even retail sales coming in lower than expected, which just goes to show, guys, consumers are spending less because of high inflation. And because of higher prices and because of higher interest rates, of course. And this is contributing to inflation continuously coming down. It's no secret, though, guys. We've been seeing that now over 2 past quarterly earnings cycles. Companies like Walmart, Target, McDonald's, Starbucks, Nike, a lot of different companies showing us that the consumer is spending less money. And now we are finally getting to see it in the actual inflation data. Retail sales are down and inflation finally starting its downtrending cycle once more. So let's take a look at some of the headlines here, guys. CPI report shows inflation easing in April, with consumer prices still rising 3.4% from a year ago. Yes, core inflation was 3.6, the lowest reading excluding food and energy since April of 2021. So 3 years, as a matter of fact, the lowest read on core inflation. Take a look. Here's your beautiful trend of inflation to the downside. This is month over month. You can see that we're back down to about 0.3%, far away from the highs of 2021 and 2022. A very good sign that inflation is indeed on the right trajectory. Now take a look at the core. Core is your light blue dotted line, the lowest reading in core from 3 years, guys. Very notable event. And you can see our headline inflation right here. This is your normal CPI number. Well, that is still kind of stagnating at what it was in relation to pretty much last summer. So we're kind of been just sticky at the bottom end of the 3% range. We're going to break down the elements of inflation and see why that's not such of a bad thing, guys. Most of all your items are down. There's only a few sticky elements remaining, but because those sticky elements represent such a high weight in the CPI calculation, that's what's really keeping us around the 3% mark. So For the inflation report, price gains on the month were driven by heavily by rises in both shelter and energy. Shelter costs, which have been particularly trouble spot for Federal Reserve officials expecting inflation to come down this year, increased 0.4%. So there's your shelter cost, right? And the energy index rose 1.1% for a month and was up 2.6% on an annual basis. So this month-over-month increase in energy and your month-over-month increase of 0.4% in shelter, two of your largest components that really contributed to bringing to keeping this number higher than we're expecting right now. If it wasn't for those two elements, guys, I'm pretty sure we would be at or under 3%. And the following charts show this even better. This is the data from the government website itself. You can see that I have a few lines plotted. So the line in red right now is going to be your overall inflation. You can see how it's kind of just sticky around the lower bound of the 3% mark, right? However, here is your goods. So look at goods, guys. We are now below zero. Most of all goods are currently in a deflationary cycle. That is very, very good. Where is the stickiness coming from? Well, take a look, guys. That is going to be your shelter. This is the purple line right here. Although it's coming down, still relatively sticky, 5.5% year over year, right? And most of all, your services as well. That's just one of your services component. But if we put in all of your other services, guys, the yellow line right here, you can see services really hasn't come down that much. Yes, it's down, but it's not below our red line of overall CPI. So goods, although they're coming, very, very favorably down, shelter is kind of counterbalancing that drawdown in goods, which gives us a sticky number around 3%, kind of right in the middle there. Now, we can see that even better expressed in this chart that I bring up every single month when we get up one of these inflation reports, right? The where inflation is and isn't presented by Yahoo. So you can see, guys, your overall inflation is about 3.4% right now. The only remaining elements above us are mostly service components. Think of auto insurance, rent, housing, restaurant meals is goods. That's just one element that's not a services, right? Earnings is your wages. So as long as you can see your wages above inflation, it means that you are earning money faster than inflation is eroding your money. That is good. That is what you want to see. Now, personal care is still slightly above, transportation as well as slightly above. That's another service. But look at everything that's now below our overall inflation number, right? Household energy down, medical care, education, alcohol, recreation, clothing, gasoline, college tuition, groceries, and then we fall into the ones that are actually in a pricing deflationary cycle, meaning prices, not only are prices staying flat, prices are actually coming down in relation to what they were a year ago, right? Hotel rooms, electronics, new vehicles, pet and pet products, school books and supply, furniture, that's a big one. Appliances, another big one for households too. Airfare for everybody that likes traveling, used vehicles, toys, and rental cars. So you can see, guys, most of your elements are under our overall inflation print, and that is a very good thing. Only a few remaining sticky elements, and auto insurance is one of the largest components of that, guys. But most of all your services branches like this, they only raise prices at the beginning of the year. So this is going to have less and less of an impact as the year moves on. So truly, we do believe, guys, that towards the end of this year, inflation should finally be trending down below 3%, maybe 2.8, 2.7%, which is well on the way to the Fed's 2% target. Still a bumpy road, but at least we're getting the job done, guys. So, as a whole, I was very pleased with this inflation report, and the markets were extremely pleased with this inflation report too, even though it came in line. It was a sign that still things continue to move in the right direction, and your market's reacting adequately to price that in as well, right? So now that we've covered our inflation, hope you guys enjoyed that. We're going to go over our two company earnings that I have prepared for you guys quite quickly and then dive into our technical analysis. So number one is going to be Alibaba. They had earnings just the other day, and you guys obviously know Alibaba from being a stock that was at its former glory days back here in 2020, and now the stock price is absolutely crushed and represents some decent value. They have some of the best financials in the game, one of the cheapest stocks in the market right now, but they're just part of an overall trade that's not very favorable right now. The China trade. The China trade is not popular for two reasons with investment funds. Number one, because of the uncertainty surrounding the Chinese economy. Chinese economy has now been in a recession for approximately 1 year, so obviously not a very favorable macro environment when you're talking about stocks that are heavily exposed to the Chinese consumer in terms of how much sales they can drive to their platforms. So Alibaba, even though they do sell very, very cheap items, still consumers pulling back from their spending on the platform. And the number two reason that the China trade is not very favorable right now is that there's a little bit of a technology war going on between the United States and the Western world and China. There's several semiconductor bans between companies like NVIDIA and ASML that cannot export their best technologies to China because there's a ban. They do not want China to have that type of technology, right? And as a counter product of that, China is retaliating on their own by also levying tariffs and taxes on US products and Western products, right? You've seen that most recently with reports coming out of China in terms of AMD, right? In terms of AMD not being able to sell some of their supply into China because China is restricting the supply of certain AMD components, right? And also Intel components. So because there's a little bit of a technology war, it really turns off investment bankers and Wall Street to the idea of investing in this country as a whole, guys. Now, these are obviously larger concerns that we can have, right? But they're not permanent concerns. In my opinion, this trade will be favorable once again, but we may just have to be waiting a little bit longer. So let's dive into Alibaba's numbers themselves. In terms of earnings, guys, they had a little bit of a miss here on EPS, right? They missed by about 1.24%, and they did beat on revenue by about 0.7%. The earnings report was fairly mixed. Why did they drop 7% on the day of earnings? Well, let's take a look here, guys. It had to do with their profit margins. They took a one-time item loss on investments that they had made, which really eroded their profit margins. Where have we seen that before in this earnings cycle? We saw it with Uber. Uber choosing to write off last Q4 some of their investments that didn't go too well. And Alibaba did the same, and this is why their stock took a big hit. Alibaba shares fall 6% after the Chinese tech giant posts 86% drop in profits. But as I said, guys, it's not because the business is less profitable. They're just tax loss harvesting some of their investments that went bad. And because of that, guys, you see a one-line item for this most recent quarter. So moving into the article here, net income attributable was down 86% year over year. We just covered that. In a bid to signal confidence to shareholders, the Chinese tech giant said earlier this year that it increased its share buyback program to $25 billion through the end of March 2027. This is true, guys. They have so much cash on the balance sheet right now. Let's take a look at some of their fundamentals, right? In terms of their balance sheet, this is one of the healthiest balance sheets that you can possibly imagine. I'm not sure why it's not showing free cash flow here, probably because there's a conversion element between Chinese RMB and US dollars, right? So it takes a little bit of time for TradingView to update these, but they did have a nice quarter of free cash flow as well, about $21 billion in free cash flow. Their cash and cash equivalents right now is about $40 billion, well above their amount of debt, just a very stable company. And in terms of their growth, guys, well, they are still growing, even though 2024 is going to be a bit of a light year for them because the Chinese consumer is still hurting because of the recessionary environment that they're in right now. EPS and revenue should be, although, EPS is going to take a little bit of a struggle right here. Revenue is growing, but you can see most of the expansion happens forecasted for 2025, 26, 27. Same here for revenue. So you may have to wait a little bit, guys, but Alibaba definitely doing its best to manage a difficult environment for the company. Now, Alibaba has been grappling with cautious consumer spending in China, but saw signs of a slight recovery in its core e-commerce business in the March quarter. The company has been ramping up its overseas push amid a domestic slowdown, right? Chinese economy is in a recession, where Alibaba has faced rising competition from low-cost players like PDD. This is Pinduoduo. You may think that Alibaba products are cheap, but Pinduoduo products are even cheaper, if you can imagine it, right? So, facing some heavy competition from them. Earlier this year, CEO Wu vowed to reignite growth in the e-commerce firm with further investments. There appear to be early signs that taking hold in the March quarter. This quarter's results demonstrate that our strategies are working and we are returning to growth. Very good. The profit drop casts a long shadow on the earnings. However, Alibaba said the reason for the fall is primarily attributable to a net loss from our investments in publicly traded companies during the quarter, compared to a net gain in the same quarter last year, due to the mark-to-market changes, right? So they mark-to-market their investments on a quarterly basis, meaning that they take a snapshot of their investments every single quarter, and if it's positive, they add that to their net margins, and if it's negative, they reduce that from their net margins, right? Alibaba touts AI growth. This is another segment of their business, their cloud business, which is very important. Investors are laser focused on Alibaba's cloud computing division, which has struggled to reignite growth. The company was planning to spin off the cloud unit, but scrapped plans for an initial public offering last year. Alibaba said its cloud computing unit brought in revenue up just 3% year over year and marking the same growth rate seen in the previous quarter. This is not good, guys. When you have other players like Google, Microsoft, and the likes expanding their revenues at double-digit numbers, for Alibaba to only be able to grow their cloud segment 3% year over year just shows that the company is severely lacking. We need to see more progress on this from Alibaba if we want to see the stock price recover in a significant fashion, in my opinion. During the March quarter, AI-related revenue experienced triple-digit growth year over year. That is good, but it's a new business segment for them, only started about 6 months ago. AI-related revenue was generated from various sectors, including foundational model companies, internet companies, as well as customers from industries such as financial services and automotive. Okay, perfect. Now, in terms of their year-over-year growth, guys, you can see their Taobao and Tmall group, guys. This is just basically their commerce segments within the Chinese market. That is up 5% year over year. Not that bad, but it's also not amazing either, right? And now their cloud intelligence group, you can see that was only up 3% year over year. Their Alibaba International Digital Commerce Group, very, very large segment for Alibaba, right? We saw that they were trying to expand more and more internationally. This is very good, guys. 46% year over year, very, very healthy for them, which gives them a total segment revenue bump of about 9% year over year. Fairly decent, guys, but it just goes to show that the company is still within a transitional period of its own. Now, that being said, it does have a few good things going for it right now in terms of the fundamentals. Revenue growth, solid 7% year over year through 2027. EPS growth, 12% per year. That's slightly down in relation to about 6 months ago. The free cash flow yield at 13% is absolutely amazing, guys. Free cash flow yield is just an expression of your pretty much your total market cap versus how much free cash flow you're bringing in on a year-to-year basis. And this is amazing. This is one of the best in the game right now. They also have a tremendous amount of money for buybacks as well. $35.3 billion through 2027, which is about almost 19% of their entire share float. That is huge, guys. It gives them, at $81, which is their current valuation, guys, about a 10 forward PE ratio for 2024. Still crushed, in my opinion, right? This company could literally double and would still arguably be cheap. And we can see that even expressed better here in the PEG ratio when we divide their PE by their growth rate. It's about a 0.83, not too bad at all, guys. So company is very, very cheap on a fundamental basis. Now, in terms of the technicals, well, since the earnings or the pre-earnings run-up, guys, we are now significantly above our prior area of congestion, and we got back up a big level, guys, got back above the $78 to $80 level. We're currently chilling above there right now. I would like to see Alibaba hold this line right now because we are finally going for the weekly trend change attempt. We have not had a weekly uptrend on Alibaba since last July. It's been so long, guys, and now we're finally above our short-term moving averages on the weekly as well, even above the 50 EMA. Also something we have not been able to do since last July and August, so could be the beginning of a breakout trade for Alibaba. So I will be looking to take positions in this area right here and try and ride the stock onto its next target, which in my opinion should be close to the $95 $100 mark. And even at that point, guys, Alibaba's valuation would still be relatively cheap. So it could be a very, very decent opportunity for a little bit of a swing trade here. Stop loss would go below the $70 mark. If you're taking entries, $78, $80, stop loss would go below here. So we're risking about $10 and we're looking to possibly make, anywhere between $25 and $30. So that would be pretty much 3-to-1 reward to risk trade. Very, very juicy swing trade opportunity in my opinion. Now, let's move into our second company we're going to look at, and that's going to be Home Depot. So Home Depot also coming in with earnings the other day, and they actually had a decent little rally after their earnings. After their earnings happened, the company went down about 3%, and they've been able to recuperate that largely since the earnings happened the other day. Now, in terms of their numbers, guys, well, in terms of their EPS, they had a very decent quarter on EPS, coming in at 0.8% on a beat, but the revenue was slightly lacking, 0.57% to the downside, and I guess you can imagine why the revenue was lacking, guys, right? Consumer discretionary spending. People are still very timid about spending their money with inflation and interest rates so high. Keep in mind, guys, Home Depot, a lot of the business is large budget renovations, right? And a lot of people do make financing agreements to do these renovations, either taking out home equity lines of credit, or they'll literally take out straight loans for them, right? And taking out loans at 7, 8, 9% to renovate your bathroom or to renovate your kitchen sometimes may just not be worth it. So a lot of people are choosing to wait. So let's see what the CEO had to say about this, guys. Home Depot misses on revenue as high interest rates hurt sales. Now, shoppers postponed bigger discretionary products like bath and kitchen remodels because of higher interest rates and made spring purchases late. Still, the home improvement retailer reaffirmed its full-year guidance, which includes an additional week from the prior year. It expects total sales to grow about 1% in fiscal 2024. Not very high sales growth, guys. A far cry from the sales growth that we had pretty much in explosive nature of 2020 and 2021 when money was cheap and things were very, interest rates were almost free, right? So the home improvement customer is extremely healthy from a financial perspective, said the CEO. And so it's not the case of not having the ability to spend. What they tell us is they're simply just deferring these projects as given higher rates. It just doesn't seem the right moment to execute. So that's what they're saying, guys. Not the right time for them. They do have the money to do it, but they think that because interest rates will be coming down in the future, they're holding off those purchases. Very, very logical, right? Comparable sales dropped 2.8% in the fiscal first quarter across the business and declined 3.2% in the US. Just goes to show you guys, people are still timid about spending their money on things that they may not necessarily need right now to live. Home Depot is contending with a tougher housing backdrop, which has dampened demand for do-it-yourself projects. About half of Home Depot's sales come from DIY customers, and the other half comes from pros like roofers and landscapers, right? Your general contractors as well. As interest rates remain high, consumers have been reluctant to move out of their homes and into new ones, the kind of turnover that often inspires home projects. Higher interest rates have also dinged the desire for large-scale projects that can require financing. For the past several quarters, Home Depot has seen customers buy fewer big-ticket items and take on more modest projects, a trend that persisted in the most recent quarter. In the quarter, customers made fewer visits to Home Depot stores and website and tended to spend less when they did. Customer transactions declined 1% and the average ticket fell 1.3%. Home Depot has seen sales moderate after more than 2 years of explosive demand during the COVID pandemic, right? So we're pretty much going to reiterate the same thing here, guys. Not going to go in any further, even though we have a few more things to highlight. But the only thing here, guys, right, is one thing that they're trying to do to overcome slower sales. The home improvement retailer has revved up its strategy to attract pros since they tend to buy larger quantities and offer a steadier source of sales. So that being said, guys, Home Depot definitely getting caught up in the discretionary spending slowdown from the consumers. That being said, it's still an extremely strong company. And also, guys, the technicals of this chart are looking very good. Monthly uptrend, retesting for the monthly higher lows, using this prior area as used to be resistance, using it as support for the potential uptrend shift on the monthly. So all in all, the company's not looking bad on a technical basis, but it still remains a difficult buy for me, guys. Most of their sales will probably resume only when interest rates come down. In my opinion, guys, that tends to be probably next year. A lot of consumers only do the renovations in spring and summer. And with interest rates potentially not falling much before September and December, well, people may just wait entirely this year and just not do anything this year and start doing everything next year when maybe interest rates and inflation as a whole are in more manageable conditions, right? So that being said, the numbers of the company are not the best, right? If you take a look at their PE ratio, look at how much they're growing, guys. Not that fast. Revenue growth 3% per year, EPS growth 6% per year. I understand it's a mature company, but still the growth is not there. That gives them a 2024 forward PE at $348 of 22.7. 22.7 on its own seems cheap, right? However, when we take in consideration their PE ratio as an expression of their growth, it gives them a PEG ratio of 3.78. That, with all due respect, is terrible, guys. Anything under 1 is very good. Anything between 1 and 2 is fairly decent, but anything above, anything above 2, 3 at that point starts to get a little expensive. And when you're almost at 4, guys, especially with the fact that you have consumer slowdown, this is just not one that I want to touch right now. There are better deals in the market, in my opinion, to be had. So that's pretty much everything for Home Depot, guys. I really like the company. I just don't think it's the right timing to get a position in the company just yet. So all that being taken out of the way, guys, let's get into, oh, I think I actually forgot to do the Alibaba, I actually did do the Alibaba growth metrics, right? I'm sorry about that. I just had like a brain fart there for 2 seconds. So now that we're done that, guys, let's move right into our S&P 500 and our technical analysis rundown, guys. And you'll see that it is a fairly brief analysis because we're pretty much right on point with our analysis so far, guys, really respecting everything we've been saying, right? So daily uptrend still in motion. Any break lower, guys, is just going to be for a higher low, anything above 515.25, higher low for further trend continuation. Now that we're above the all-time highs, 523, we could be expecting the all-time higher region right there to be acting as a fallback zone for the bulls, retest this, and maybe launch for one more leg higher. Looking extremely good above all of our major moving averages as well, and really starting to create some distance between our lower range of support that we had down here. We're now above the all-time highs. This is now going to become the new area of support, looking very, very, very strong for the bulls, if I do say so myself, guys. No red flags. And take a look at your weekly, guys. Weekly, massive engulfing move. Love to see it, right? Gorgeous weekly uptrend. The SPY never really lost the weekly uptrend, right? Now just back to doing things that they do best, just grinding these markets higher. No red flags at all. Moving on to QQQs now. QQQs, relatively same analysis, right? So looking very good. Any move lower, just going to be looking for a daily higher low, anything pretty much above 437.86. Looking for that daily higher low for further trend continuation. Now, where are we in terms of relation to our all-time highs? We are now finally above the all-time highs, guys. So this whole 445, 444 region should be acting as a first line of defense for your bulls. If ever we struggle to break out any further, come back down, retest it, and then move on for one leg higher. Looking very, very healthy. Tons of space off the most recent higher lows, guys. Looking very good. No red flags. All-time high breakout for your bulls. Congratulations. And on the weekly, guys, well, we had the weekly downtrend going there for a while on the QQQs, and now the bulls fully engulfing this move. So even if for ever which reason, guys, we set a daily downtrend, I'm so tired of this thing popping up. Sorry, guys. And now, as soon as we get a daily downtrend, guys, not that big of a deal. Just gonna be looking for a weekly higher low for further trend continuation. And now that we're above all this all-time high resistance, that is most likely where the markets are going to take us down into before making another leg higher. These markets are looking very, very good, and they're very, very broad, as we're going to see now when we take a look at our financials and healthcare sector. The market is very broad. Everybody is participating. In terms of financials, guys, beautiful daily uptrend still underway. Still looking for that daily higher low, guys. No loss of the hourly trend change, right? Hourly double bottom right here. No set of the hourly downtrend, resumption of it. So this is still one leg up, guys. So nice daily move up. As soon as we get a little bit of a pullback, guys, just looking for a daily higher low, anything above 40.2, daily higher low for further trend increase. Now we're also above all of our short-term moving averages, and we're above this big red box. The big red box is previous all-time high resistance. Now we should be able to use it as support. So if ever the bulls do something like this, and then eventually we get a daily downtrend into here, you're just going to be looking for that juicy weekly pullback, retest, and then run a little bit further on financials. Looking very, very strong, guys, on financials as a whole. Love this industry. And I really do think that they'll stand to benefit a lot when rates start coming down later on in the year. Now let's move on to healthcare. Healthcare also looking very fantastic today, guys. Healthcare largely recovering. You know, they were trailing behind, but now been really accelerating in the past week of trading, right? So looking very, very good. Daily uptrend right now, healthily underway for healthcare, looking extremely good. Any move lower at this point, just gonna be looking for a higher low, anything above 143.16, higher low for further trend continuation. We are now above a crucial level of resistance, guys, 144.75. If we were to retest this area, we will be using it as support. Could be on to our next leg higher, targeting the all-time highs. No red flags for healthcare. And now look at the size of this bounce on the weekly downtrend. And we were saying over here, the bounce in healthcare was weak, right? At this point in time, SPY and QQQ had already bounced significantly. Healthcare was left behind, and we were saying it needs to play catch up. Now it finally has played catch up, right? So now we are on to an engulfing move, almost looking very, very good, which leads us to believe even if we do have a bit of a daily downtrend sell-off in healthcare, just going to be looking for that higher time frame, weekly higher low for further trend continuation, guys. Looking very, very good on healthcare. Nothing bad to say. Now, looking on to semiconductors. Semiconductors are also looking a bit healthy today, right? Very, very healthy, as a matter of fact. Gorgeous daily uptrend right now. Just looking for a daily higher low as soon as we pull back. Anything above 218.25. Daily higher low for further trend continuation. Now, we are above a very big section of prior resistance, so we should be able to use this if we do go up a little bit higher, grind down to here, use it as support, and blast off higher for semiconductors. Semiconductors really looking to pull ahead. One of them that's been left behind, guys, is AMD. AMD, one of your more crushed plays in semiconductors, right? So that could be a very decent opportunity for a little bit of a swing trade recovery to basically follow the rest of semiconductors and how they've been acting recently, right? Looking very, very good. And even on your weekly, guys, it was a weekly downtrend. And now what have the bulls done? Completely engulfed the move. So even if we get a little bit of a daily downtrend here, well, expect the bulls to just be able to set the weekly higher low into the potential weekly uptrend shift, looking very, very good on semiconductors. Now moving into IWM Russell. Russell not looking too bad at all. Very, very nice price action movement, right? Same thing as the rest of your markets, guys. Any move lower, just going to be looking for a higher low, anything above 202.60, higher low for further trend continuation. Now, we are closely coming up on our 212 area of resistance. This is the area that has stopped us in our tracks once before this year and a lot previously, right? Big level back here in 2021 and also resistance right here. I would not be surprised if it's a little bit challenging for the bulls. So one of two scenarios that we can see. Obviously, the blast through can definitely happen. At that point, you would like to see a crack above here, use it as support and continue mounting the rally. However, the other scenario could just be a likely resistance, a rejection from resistance, pull back a little bit, set a potential weekly higher low, and then smash it with a little bit more momentum. One thing's for sure, momentum right now is definitely favoring the bulls. Daily's looking very nice, and the weekly recovery is looking very, very gorgeous as well on the Russell. So congratulations to all of these small cap bulls, looking very, very good. Now moving on to the Dow Jones. Lastly, Dow Jones performing very, very nicely today, guys. And the Dow Jones also eclipsing the new all-time highs. So daily uptrend healthily in motion here. We had a little bit of a pullback yesterday, loss of the hourly uptrend ever so slightly. So that was enough to set the daily higher lows. And now we're on to highs. So as soon as this move tops out, looking for a daily higher low, anything above 39,300, we'll be looking for the daily higher low for further trend continuation. Now, if ever we pull back in a meaningful fashion in a daily downtrend, that's okay. The weekly bulls have everything under control, guys. Engulfing move, any pullback just going to be for a weekly higher low for further weekly trend continuation on the Dow Jones. All of your major indexes are looking very, very good. The bulls are back in full control, guys, of the daily and weekly timeframes, the ones that they never lost, of course. The reason why we maintained bullish throughout the April dip was because the monthlies were always in control of our longer term bulls, and now we can see why that matters so much. Now, moving on to Bitcoin and Ethereum. Bitcoin finally breaking out here, guys. Daily uptrend is underway on Bitcoin, looking very, very good. Finally above our short-term moving averages as well. We've been trapped below these guys. It doesn't seem like that long, but we've been under these for almost a month at this point, right? So very, very nice daily breakout on Bitcoin. Looking very, very good, guys. We're closing right at our line of resistance, the 66,400 range. That is pretty much the prior all-time high range, right? Looking very good. If we can mount and close above this by tomorrow, going to be looking very good as well. They've created a lot of space off these lows. Any move lower, just going to be looking for a higher low. Anything above pretty much 60,200. Just looking for that higher low for further trend continuation. Now, all of the moving averages can act as support, and this previous resistance line right here, 64,000, is going to be support as well. So could see something like this looking very good on Bitcoin. And now the weekly breakout attempt is underway by Bitcoin as well here, guys. This is a weekly downtrend, so we need to watch how much of this weekly move can the bulls take back. So far, so good. We've already taken back roughly 62% of the move, so it really leads us to believe that either the V-shaped recovery is coming or at least the potential two-step recovery is in process. All in all, Bitcoin looking very, very healthy. Now looking at Ethereum. Ethereum also reacting positively on the day, but looking a lot weaker than Bitcoin in my humble opinion, right? Now, Ethereum still in the course of this daily downtrend. Need to finally break out, right? Still hasn't broken out. Need to get a break above 3,040, which is currently happening right now. And then we need to mount above it, get above these moving averages and really set a daily uptrend in motion. And at that point, need to start recovering more of this weekly move, guys. Start attacking this most recent lower high, at 3350, right? Weekly downtrend, need to attack this most recent leg of selling. And if we can get a juicy move into there, could be an ideal opportunity to reset into a weekly uptrend. So Ethereum kind of trailing behind. Bitcoin has really been the one driving these markets so far. Ethereum, still a decent area, guys, to place in some bids in this lower zone right here, because as Bitcoin potentially marches higher, Ethereum will be an opportunity for a carry trade. Now, let's move into our big tech names, guys, shall we? So our big tech names looking fairly decent today as well. Apple up 1.22%. No secret there. Daily uptrend just continues. This thing has been on an absolute rocket ship recently. Just be wary, guys, coming up on daily overbought conditions here soon. So in the event we do get a pullback, just looking for a higher low, anything above 180.4, looking for that higher low for further trend continuation. Any consolidation on Apple right now, I will be probably looking to make a trade on this stock if it does come down into the mid 180s again. 185 all the way down to 180 seems to be a very juicy location for Apple. On the weekly bulls are quickly regaining all the control they've lost. This is one weekly engulfing move. So even if Apple sees something like a daily downtrend retracement here, just going to be looking for a weekly higher low for further trend continuation. This would be a textbook perfect trade. If we pull back from here down into the lower 180s, we would be tagging this, all of the moving averages on the weekly, and also our previous area of support right down here. Textbook breakout, retest and run. If we pull the retest in this area, guys, not financial advice, but this is a very, very high probability trade on a very strong company. So do with that what you will, but I will be bidding very heavy down here. Looking good on Apple right now. Moving on to AMD. So AMD is still one of our laggards in terms of semiconductors, right? However, today they did do something significant. They did what we wanted them to do over the past week. We've been watching for the daily higher low and the daily uptrend break. We finally have the daily uptrend break, which is very good. We're running into a little bit of resistance right now, though. This previous box right here, previous resistance, that is 165 down to 158. We're trying our best to plow through it. What the bulls could do with renewed momentum in the markets, right? Over the next few days, if we can see a break and close above this box of resistance, we then be able to then use it as support and continue this daily march higher. We need to see the daily march higher continue, in my opinion here, guys, at least above our most recent leg, which is about 162, right? So this has been one leg of selling, two legs of selling, three, and then they failed. So now we're almost back above this 162 level. If we can engulf this, it gives the bulls a great opportunity at resetting even the weekly uptrend and really setting a bottom in terms of this monthly time frame that we've been waiting for here, guys. So this zone that I drew on the charts right here, 140 all the way down to about 131, still the good area of support for AMD. Now that we've kind of come up a little bit, guys, on my short put plays, I will be targeting this lower area right here, probably between the, let's call it 150 down to about 145. I don't think we're going to get back down here if the markets continue ripping to the upside. So it could be a very decent swing trade opportunity for AMD that has been left behind in relation to the rest of its semiconductor peers. Now, moving on to Amazon. So Amazon performing nicely on the day, even though they were down 0.58% to the close, they were actually down significantly more on the morning. So great recovery by Amazon intraday. Now, they were down almost about 2% on the day. And if you look at the daily chart, guys, it really doesn't show, right, what happened today. So just looking for that daily higher low for further trend continuation. Now, we are starting to change the hourly trend back in our favor. It's been very choppy since this pullback from the all-time highs. Looking to change that back in our favor. If the uptrend on the hourly continues into tomorrow, fairly confident in saying the daily higher lows are set, and we will be looking on to make a new leg towards the all-time highs, looking very good on the daily for Amazon. Amazon pure trade level, still very decent area for a swing trade, even around here. I know it's at the all-time highs, guys, but I do expect Amazon to be rallying significantly for the rest of the year as well. Their fundamentals are just so good right now. In terms of the weekly chart is looking gorgeous as well, right? Clear weekly uptrend, no sign of stopping in sight. And even if we do, for some which reason, set a daily downtrend and come back into our lower area of support down here, 176, 175-ish, well, just going to be looking for the weekly higher low for further trend continuation. So Amazon, a very good, guys, very good swing trade opportunity if we do revisit the lower levels below 180. Now, moving on to Google. Give me a very quick second. All right, so moving on to Google, guys. Google not looking too bad at all, up 1.13%, right? Looking very juicy. And now breaking out of this tight range of consolidation. Now we do have the daily uptrend, right? Low, high, Higher low, higher high, daily uptrend is confirmed at this point. Our next target is going to be the all-time highs at 176.12. Looking very good, guys. The bulls are playing tremendous defense at this 12 EMA right now. So even if we top out here in the next few days and have a pullback, any single pullback looking for a higher low, anything above 165.60, or sorry, 165.50, just going to be for a higher low for further trend continuation. No red flags on Google. Momentum is very, very good. Even on the weekly, guys, take a look at this weekly chart looking very, very good for a weekly trend continuation. Extremely strong stock, extremely strong chart as well. Monthly uptrend, healthily in motion. And we're not even really overbought, guys. Not overbought on the daily, not overbought on the weekly as well. So really no sign that Google is going to slow down anytime soon, guys. The psychological levels of resistance obviously are going to be 180 and then all the way up to 200. Google looking extremely, extremely good. If for ever which reason, guys, we pull back lower here and set a daily downtrend, let's say, because the markets consolidate maybe for a week or two, could be healthy consolidation. We get a little bit of a pullback here down into the 160 range, maybe mid 160s. That would be the target that I'm looking to make some more swing trades on Google from. But for now, very happy with all the shares that I was able to accumulate over these lower areas that I kept screaming at everybody that it was a good buy on the chart back when we were back here. Moving on to Meta right now. Meta also looking extremely healthy, guys. 2% up today. Daily uptrend simply continues. Yesterday, we were on the watch for the daily higher low, and we got it. I was telling you guys, watch the hourly trend change. We engulfed the move yesterday. If it continues into today, you have the daily higher lows, and you will get continuation, and that is exactly what's happening. Gorgeous daily uptrend right now. Looking to smash through this resistance right here, guys. 481.36. We are literally right there on the chart. We are now above our short-term moving averages as well. So I would like to see Meta break above, close above this, and then we could possibly use this area to set the daily higher low. At that point, guys, anything above 460.22 would just be looking for a daily higher low for further trend continuation. If for however it's reason, guys, we do break down from here, because that's always a possibility too, right? Just going to be looking for a weekly higher low to get the weekly uptrend back on Meta. In my opinion, should be easy mode for Meta because their earnings were very good. Their profitability is at record highs, and the company is just firing on full cylinders right now. Great cost control, great margin expansion, great revenue expansion. Everything is really working in the right direction for the company. So looking very, very good on Meta. Now moving into Microsoft. Microsoft blowing out here across almost towards the all-time highs, guys. Looking very, very good on Microsoft, 1.57%. Daily uptrend, well in motion at this point, right? Any move lower, just going to be very higher low, anything above 410, higher low for further trend continuation. We were on watch for the break of the higher end of this resistance bound, about 415.4. We got it today, guys. So now we eye the all-time highs, 428. If we cannot get it done in one clean shot, we have left tons of space below us to set a higher low and go for the daily engulfing move of the all-time highs, right? So looking very, very healthy on Microsoft. We've been looking out for that, guys. We've said that Microsoft has gotten a little bit left behind back here, and it was a good swing trade opportunity, and now that is finally coming to fruition, nicely above our moving averages as well. No red flags, and weekly. Look at this gorgeous weekly breakout, guys, looking extremely healthy. I really do believe Microsoft is well on its way to smashing the all-time highs, and once we're past this, the next area we target, guys, is the 450 psychological area for Microsoft. Microsoft is still a great swing trade opportunity, guys. If for whatever reason we fall off and the markets consolidate for 1-2 weeks, let's say, because we have been running up now, guys, even on SPY and QQQ, right? 4 weeks in a row. If we consolidate here for 1 to 2 weeks and big names such as Microsoft pull back, that's going to be the next entry, guys, for the weekly higher low and the weekly trend breakout. So keep a very close eye, guys. Next time that a lot of these big tech names consolidate could be a last chance to dance to ride them past their all-time highs. Now moving into Netflix. Netflix kind of hesitating today, right? Been relatively flat for the entire week of trading, so really nothing has changed. Still just in this gorgeous monthly uptrend, daily uptrend right here. Consolidation sideways, which is the best case scenario for any stock, right? Just goes to show that the bulls are so healthy that they don't even want to give back too much space. We're above our moving averages. We're above this zone of consolidation, right? This is your previous line of resistance. It's now support. And we're above the 575 as well, which is our big area of prior resistance back here. So we're well above these two big areas of congestion. That being said, daily higher low, we're looking for the daily higher highs. And if we start breaking out here, keep an eye, obviously, guys, your next resistance level is going to be your 640 and then all the way to your all-time highs. There's really not much in our way after 640 until the all-time highs. So looking forward to that break on Netflix. However, if ever we break down into a daily downtrend here, guys, no problem at all. Just have enough space here, guys, to set the weekly higher low for the weekly trend change. So all in all, a very bullish chart on Netflix, whichever way it goes. If it breaks out to the upside, similar to Meta pretty much, right? Break up to the upside, it's good for the stock. If we break down to the downside, it's still good, looking for the weekly higher low for further trend continuation. Everything's looking very healthy, guys, I have to admit. Now moving on to NVIDIA. NVIDIA also looking not too bad today, 3.5% to the upside, right? Earnings next Wednesday. Can we break the all-time highs before earnings next Wednesday? We will see, but it's looking very, very good though. Daily uptrend clearly in motion at this point, right, guys? This was pretty much your daily bull flag. Consolidation sideways into a break, looking very good. So now any pullback just going to be looking for a higher low, anything above 884, higher low for further trend continuation. No red flags. Do not go against the trend on NVIDIA, guys. And do not do it. Trust me, I've known a lot of people who've lost a lot of money trying to short this stock. It is just not worth it. The trend is your friend, right? So looking very good on NVIDIA. Nothing bad to say. Weekly trend is obviously beautiful right now. Looking for the break of the all-time highs, 969. And then the psychological level is up to 1,000. So we'll see how the price action comes into earnings. But one thing I will need to point out, guys, a lot of stocks that have run up significantly prior to earnings, then when their earnings came out, they have dropped. Actually, they've either remained flat or dropped. So be very, very careful. I know NVIDIA is one of the most bullish companies in the market, but the bar is set extremely high for NVIDIA right now. That's not saying that they can't beat it, but when you have such high expectations, anything other than perfect results and perfect raise of guidance as well, right, is going to be met with a little bit of selling pressure. So just keep that in mind. If NVIDIA rallies too much prior to earnings, it may just be a case of sell the actual news, which could be a very juicy buy opportunity for all of us. So that's the moral of the story. If we run up before, you know, my opinion, guys, with the way I'm trading this, I never try. Let's say we bid up all the way up to here prior to NVIDIA earnings. I'm not going to be buying the stock before earnings to get the incremental gains, right? I would rather, if we do get an incremental rally into the earnings period, I would rather wait for earnings. And if they drop into this big area of support, that's where I'm going to be buying, guys, especially if earnings are really good and guidance is really good, but it's just like, it's not fantastic and perfect like Wall Street is expecting. That's the type of trade that I'm looking to take on NVIDIA myself. Now moving into Tesla. Tesla's struggling on the day, 2% to the downside, right? Tesla's still just struggling in this lower area of support. Daily downtrend, the bulls are trying their best to create some space to get that daily uptrend back, right? So they have to protect these lows. 167.82, looking to set the daily higher low and reverse this into a daily uptrend. We would need a break of today's high. Break 180 and you will have a new daily uptrend. And then you will know your weekly higher lows are set and that we're looking potentially to reset into a weekly uptrend. Still a lot of work for the bulls to do, guys. And we cannot lose, of course, 162, 160 level. If you lose that, guys, the bulls lose too much ground towards the bears. And then you may just end up, best case scenario, a tightening range. And worst case scenario, the continuation of the weekly downtrend, guys. So right now is a very pivotal time in Tesla's journey of recapturing the higher timeframes. So it remains to be seen if it can be done. Need to get this daily back. If they get the daily back, guys, it's going to be looking very good for an attempt at coming back up and breaking this 200 level that's been very, very challenging for Tesla pretty much over the past 6 months of time. So that being said, if Tesla does dip a little bit more down here, I'll probably be making some short put plays, probably 150 or lower. I don't think we go down below there. I still do think the bulls have a good chance of saving this, especially when the rest of the market is bullish, but I don't want to get too greedy on my entries. I want to still be very, very conservative. Now, moving on to Palantir. Palantir actually looking fairly good today, 1% to the upside, 21.67, and Palantir just trying to recapture as much as possible of this earnings move. Looking very good so far. Just need a little bit more from Palantir, guys. Need to see them break above our moving averages and break above this 23, or break at least close to the $23 level, right? What are we looking for? The size of the bounce from the most recent down leg after earnings. the $23 mark would be about 50% of the move. So I would love to see the bulls get at least as high as 50% of the downswing. That gives them enough space to maybe set up for the daily trend change and really start taking back some of this weekly damage that was caused by earnings. That being said, you guys obviously know the $20 to $19 range is one of my favorite ranges to be playing Palantir, as we're just looking for the monthly higher lows. So the monthly timeframes, the weekly timeframes also acting as support right here. The longer term bulls are at our backs. It's just that we're still in some extended sideways consolidation on Palantir. The entire time it stays within this 21 to 19 range, I will continue to play short puts fairly aggressively. And now lastly, PayPal. PayPal coming in about 1% loss for the day. So PayPal still just struggling in this area right here, right? So daily downtrend is confirmed right now. The bulls are trying to get an engulfing move going, right? Sorry, that was a bit unclear. Trying to get the engulfing move going. What we need to see, guys, is need to set the daily higher low and break up today's high, similar to Tesla. If we can get that going, the bulls will have their new daily uptrend, and then we could start maybe getting some of this weekly momentum back on the charts for your PayPal bulls. For now, though, just kind of consolidating sideways, maybe a little bit of a trade opportunity. Short puts really down here in the maybe $61, $60 range. Don't want to get too greedy with it, because if we start breaking down here, not going to look good. You'll lose all of your weekly structure and even the monthly structure too, guys. It won't be looking the best. Monthly bulls are trying to get this into a monthly uptrend, but you really cannot lose the $60 level or you start losing massive structure. So PayPal still showing a lack of momentum, unfortunately, but at least we're still in an area that we can make some plays to bid the stock and collect some juicy premium if short options, more specifically short puts, are your thing. So hope that was educational for you guys. If you enjoyed the video, consider dropping a like, would really appreciate it for the algorithm, and consider subscribing to the channel if you're new. We do these videos every Monday through Friday, guys. Really appreciate all your guys' support so far. It's been so fun. And lastly, guys, if you have any questions at all, please feel free to comment down below. Anything you want, macro, technical analysis, stocks, options, whatever you want, guys, leave it down below and I'll be happy to answer you. So as usual, I will see you tomorrow after the close for our Thursday market recap. Take care and peace.